Welcome to The Upside, a weekly show that helps you make sense of your financial life. We hope to provide you with financial tips, insights, and timely discussion on topics we find interesting and you find informative. We'll go beyond the headlines, bringing in experts from all over the financial world, from portfolio managers and investment professionals to retirement and tax experts and everything in between. We want to help you make the most of your money and your life. Welcome to the show. I'm your host, Emily Enenuevo. Well, 2020 began on somewhat solid ground for the markets, but now has taken a different turn as the coronavirus spreads to countries outside of China. The markets are falling because of it, and investors are trying to make sense of it all. So in the face of economic uncertainty, the question is, how can investors weather this storm and position themselves within all this change? Portfolio Manager Darren Lekkerkerker joins us today to provide some insight and help talk us through some of these issues. Darren manages the North American equity class and co-manages the Global Natural Resources Fund. He also oversees the equity subportfolios of the Canadian Balance and Canadian Asset Allocation Funds. Welcome to the show, Darren. So happy to have you here.
Hey, thanks. Happy to be here, Emily.
So like I said off the top, obviously a lot of activity in the markets right now. And you know, it's hard to sort of filter through it. I know you manage the North American equity class. How do you, as a portfolio manager, prepare yourself in these times of uncertainty?
Right. I think first it starts with having an investment style and investment process. And in times of uncertainty, it's good to lean back on that. So just to repeat my style, it's investing in quality businesses at a reasonable price. And so for me, that's three things. Is this a high quality business? Two, is management shareholder oriented? And three, is valuation attractive? And then owning a concentrated portfolio of companies that can compound their value over time. And then also just leaning back on the process, which is really focused on going to company meetings, which I've actually been doing today before coming here, and also talking with our extensive team of analysts, and then three, risk management. And with regards specifically to today, hey, look, it's been a bit of a crazy time in the market over the past week, and we've seen stocks fall up to 15% in the past week, up to this morning's price. And so I think that kind of look, clearly there's some bad news out there with the coronavirus and the impact on humanity, but also earnings. However, that's a lot, and I don't think that investors can expect to make strong long-term returns if they sell into a market panic. And so instead, what I'm doing is I'm just trying to manage the portfolio. One, we're like I'm doing this morning, we're calling our companies and trying to contact them where we can and better understand what's the impact of the virus on their business. And then two, I want to make sure that with any company I own that does have direct exposure, meaning that its top line and its earnings will be impacted, I want to be comfortable with what that amount is and where the shares are trading. And then two, I'm also looking at making sure I'm comfortable with all the balance sheets and everything like that. And it's something that obviously we've done before we bought the company. But one, there's probably some opportunities to sort of high grade performance in the future by maybe selling a company that hasn't had a big reaction in its share price, or maybe buying something that's not very exposed to the virus, but the share price is down a fair bit.
In terms of the coronavirus, and the markets historically have reacted, internationally to certain viruses like this. It's a little bit different than SARS. It's more like a flu virus. So I guess my general question is, should investors be worried? How can they weather this storm in a sense, and just defend their portfolios in this time?
I think investors have worried a lot. That's why stocks are down 15%. So I think that's happened. I think that there will be some impact, but I think a lot is also priced in at this point into the market. And so I think that investors should not try to pick the bottom, but try to think about investing in businesses and funds over the long term. And I think if we take a long-term, multi-year view, I don't expect that the coronavirus, and certainly hope that we're not still talking about the coronavirus, won't still be having an impact. And I guess we'll see. We're still learning about it, and the summer seems like a long time away right now, but what's going to happen to it over the summer, and how is it going to unfold over the next couple of weeks. But I think that generally when making investing decisions, it's good to think long term and make sure you know what you own and you like what you own. One of the process that we're doing here is we're actually speaking with the companies that we own and asking them. I met with the CFO of a company I own this morning, and hey, what is the impact on your business from the coronavirus? And so far this particular business hasn't seen it yet, but I guess we'll see.
Switching gears a bit, there's certainly been a lot of debate and discussion when it comes to pipeline projects these days.
Right.
Complex issue without getting into the certain politics of it. I just wanted to get your thoughts overall on the rail and transport industry and the effects of what's happening now on it. Yeah.
Right. I think owning a railway is a great business. It's a high quality business, as I've kind of defined earlier. And I think that there's an opportunity for the rail to benefit here from this lack of sort of pipeline takeaway capacity for Canadian oil production in terms of crude by rail. And I think we're seeing that now, and we'll see that in the earnings for these companies.
This being your first time on the upside,
right.
I wanted to get a bit of background on you and hear a little bit about your investing journey, how you got into investing. I know there's a neat story about when you were 10 years old getting your first stock, if you wanted to share that.
Yeah, it's really coincidental how I found out about the stock market. Neither of my parents or anyone in my family was involved in it. And when I was 10, or just before turning 10, one of my cousins, or two of my cousins actually, a relative of theirs, a distant relative, gave them stocks. And so as a 9-year-old, I was like, what is that? It really piqued my interest. And so my parents were like, what do you want for your 10th birthday? And I'm like, I really want to get on the stock market. And they're like, get out. So anyways, I did. I got like 5 shares of Bell Canada for my 10th birthday. And so it was the first stock that I started to follow. And that's how I began this journey. And so
from a young age, you were definitely interested in it. And, I know here at Fidelity, we have a great team of like research analysts and whatnot. You've been in the industry for a long time. Is that sort of what keeps you, motivated and intrigued in this industry?
Yeah, look, it's always fun to have a job doing something that you find really interesting and fascinating and you're passionate about, right?
Mm-hmm. Now, your investment style is quality at a reasonable price. What exactly are you looking for in companies, and how do you adapt your investment strategy with all the ebbs and flows of the market?
Right. I tried to define it earlier, and so I'm looking for 3 things, and so I'll just mention them. I won't go into it, but a high quality business, shareholder-oriented management team, and attractive valuation. I generally would like to invest in businesses that over time can give me greater than a 15% annualized return. And so for me, I try not to adapt my style to every ebb and flow of the market because it's not really possible to, right? Instead, my approach is to own a very concentrated portfolio of high quality businesses that can compound their earnings and value over time.
Darren, I just want to thank you so much for being on the show today, sharing your insights and thoughts. Really appreciate your time.
Yeah. Hey, thanks, Emily. It was a real pleasure.
And thank you for watching. Now, if you like this episode of The Upside, please give it a like. And if you'd like to see more content of The Upside, please visit Fidelity Canada's YouTube page and subscribe to our channel. Thanks so much for tuning in, and I'll see you next time on The Upside.